Another question, given that our strategies from their peaks have dropped anywhere from 60 to 80% since February of 21. This year has been the most difficult year of my career, worse than 08-09, and I would venture to say that it has been the most difficult year of many investors' careers.
Renowned American investor and hedge fund manager Cathie Wood is one of the more closely followed investors, especially after her investment management firm, ARK Invest, recorded massive gains in 2020 and early 2021. Unfortunately, the past 2 years have not been as favorable for Cathie Wood and ARK Invest. In February 2021, her flagship ARK Innovation ETF climbed to over 300% from pandemic lows in March 2020. With the repressive macro environment, the flagship is now down by over 60%. Regardless, Wood's conviction in disruptive innovation technologies remains as strong. In a recent end-of-year broadcast, the hedge fund manager discusses the performance of her investment management firm and her strong conviction in disruptive innovations like blockchain technology, genomics, robotics, and autonomous technology. As she has done in previous broadcasts and interviews, Wood explains why she believes these technologies are going to easily outperform benchmark stocks within the next 5 to 8 years. In fact, she expects these technologies to grow by billions of dollars in market cap over the next 5 years. We now take you to Wood's video as she discusses her predictions for ARK Invest and her highest conviction names. Please watch the video to the end, hit the like button, and subscribe to the channel for more videos like this. Also, ensure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and contributes immensely to the channel's growth. Thanks and enjoy the video.
Another question, given that our strategies from their peaks have dropped anywhere from 60 to 80% since February of 21. So this has been almost 2 years. Why do we not turn defensive like most managers are doing? Well, there's a very important explanation for that. We do one thing. We do not pretend to be an asset allocator. We are our research and our investments are centered on disruptive innovation. And so when advisors and individuals choose our strategy, they're not choosing it alone. They have more diversified portfolios, of course, including real estate. The biggest asset most consumers have is housing. So we are one part of an investment portfolio, and therefore we would never be using cash. We would expect advisors and individuals to basically raise cash and segregate it from their investment portfolios. In terms of our strategies, we, during downturns, concentrate towards our highest conviction names. And so we have been doing that now for nearly 2 years. And the history would suggest that concentration strategy plays out very well in the subsequent rebounds. And we do think this rebound will be quite powerful. The only thing that worked this year was energy. It's up almost 50%. And many people are asking us, why don't we diversify into energy since it's working? Well, the reason for that is we think it will stop working if our forecasts for electric vehicles and autonomous taxi platforms are correct. Then oil demand could drop by roughly 30%, 30 million barrels a day during the next 5 to 10 years. And we believe that demand destruction has already started. It looks like oil demand peaked in 2019, and we're still in the process of peaking out, I would say, in the 100 million barrels per day range. But we think the resolution of that basing period here is going to be down. So we wouldn't be investing in energy, and we think the indexes that have rebalanced and now are including more energy are mistaken, and those investments, that rebalancing will not work out.
Despite the bear markets and her stock's poor performance in 2022, Wood has been buying up shares of Tesla, Coinbase, and her other high-conviction names. In her broadcast, she explains that the macro environment in 2022 was quite repressive, but things are going to change in 2023. According to the renowned investor, several metrics for measuring inflation have peaked, meaning the U.S. Federal Reserve may soon have to make a complete reversal in its aggressive interest rate campaign. Here's Cathie Wood's prediction for the macro environment in 2023, as well as how she thinks it will impact ARK Invest.
Another question. You have been buying more Tesla and other stocks during the downturn, and yet the prices have fallen further, and our performance decline has worsened. With interest rates and prices fluctuating so widely, and in this case they probably mean increasing, will an investment focus on innovation work? Well, we believe that the leading indicator, correctly, is inflation, and it has peaked. The inflation rate has peaked. Almost every measure of inflation has peaked. Most of those metrics peaking out in March or June of this year, in the first or the second quarter. So typically, that's a good thing for innovation. But as I just mentioned, I think the market is so skittish and has been so terrorized by the most rapid increase in interest rates ever. We have never seen an 18-fold increase in interest rates within 1 year. It has truly terrorized the markets. And I think that the fear is palpable. In fact, I think according to the Bank of America recent surveys of fund managers and advisors, it's probably the advisors, we haven't seen this amount of cash on the sidelines since I think it was 2006, maybe even 2001. I do know also the same survey shows that the put to call ratio in the US market, meaning those short relative to those long put calls, is at 1.5 now, and it has not been that high since 2001. So we have an incredible amount of fear in the market, and that actually is the best time to average into these markets. I remember in late 20, early 21, we could do no wrong. Anything we said was gospel at the time, and I knew that wasn't right. And at the time, I remember saying, keep some powder dry. It is for these moments, or averaging down throughout a period like this, that one keeps the powder dry. This period seems to be the flip side of the late 90s. The late 90s was an irrational increase in tech stocks, appreciation in tech stocks. And it was incorrect. The technologies were not ready. And even if they were close to being ready, costs were way too high. So technology's not ready. We didn't get the cloud till 2006. We didn't get the big breakthrough in AI, deep learning, until 2012. The cost for DNA sequencing, $2.7 billion for one genome back in 2003. That number is down to $500 now. We are ready for prime time, and yet investors are doing the opposite of what they did during the late 90s. They are running away, running for the hills, running for their benchmarks, and we think that innovation is going to pose a problem for the benchmarks.
What are your thoughts on Cathie Wood's prediction for her investment firm and disruptive technologies in general? Do you think her strategy is flawed or a brilliant move that could secure her a place in the history books? Please drop your comments and observations in the comments section below. Also, ensure you subscribe to the channel, hit the like button, and turn on post notifications for more videos like this. Thanks for watching.